Hi, it's Alex. So, have you ever had $100 in your wallet and wondered how you could turn it into $1,000, $10,000, or even $100,000? Well, sadly, this isn't something they teach in school. Come to think of it, it'd have been pretty awesome if they had. Because of this lack of knowledge, it seems pretty scary for most beginners to get started in investing. But in today's video, I'm gonna simplify the whole process. Investing my money allowed me to become a multimillionaire. And guess what I started with? That's right, $100. Well, probably less than that, to be honest. I'm not saying becoming rich is easy, but by taking calculated risks, you'll be able to grow your wealth over time. I understand that everyone has a different risk tolerance, so today I'm gonna be revealing how to invest for beginners with $100. And as we go through the video, the risk is going to increase. Risk level. But remember, as the risk goes up, so does the potential reward. I'll also be putting my money where my mouth is and investing $100 into each one of these options, so you can see exactly how to do it. I'm just about to invest in something I never thought I'd actually do. Here goes. When someone asks me how they should invest $100, I usually say, invest in yourself. You can do this by buying books and improving your skills, but assuming you've already done this, now we're gonna be talking about the specific places you can actually put your money. Now, I'm a businessman. I'm not a financial advisor. These are just some of the ways I've invested my money over the years, and they've worked for me. You can also sit back and relax, because I'm not gonna try and sell you anything at the end. Just remember, if you enjoy the video, then smash that like button, because it really helps push this video out to more people. And also consider subscribing if you want to grow your wealth. The first investment is a high-interest savings account. High-interest savings account. This is the lowest possible risk that you can have. Nowadays, it's extremely hard to find any savings account that will pay a substantial amount of interest. But that's not the main reason it's on the list. By putting your money into a savings account, you're actually starting to create what I like to call an emergency fund, which I believe everyone should have. This is money that you can access if something unexpected comes up, and it's extremely low risk. And by having money on hand, you can avoid getting into debt and having to pay crazy fees back. I remember when I bought my first house, I had a minor crisis after about 2 months, as the plumbing system went wrong and it needed replacing. Because of my emergency fund, it saved me over $200, as I didn't have to take out a payday loan. When you leave your money in the bank, it slowly loses its value. So when I am looking for the best savings account to combat this, I look for two things. The first, of course, is a good interest rate. Saving account requirements. 1. A high interest rate, which depends on the economy, mostly. The second thing is having the ability to access my money instantly. Some banks that are really worth looking at and consistently have a good rate of interest are Ally Bank, Discover Bank, and Capital One. I currently have an account with Discover Bank, and their interest rate is competitive, which isn't sky high right now, but is currently one of the best available. So, there we go, nice and easy. $100 deposited into my savings account. Now for gold, often referred to as a safe haven. Did you know that, since the creation of the Federal Reserve in 1913, the US dollar has lost a huge portion of its value? So, you're actually only left with a fraction of its original purchasing power. So, if you want to stop your money losing value, then maybe gold is for you. If you had a $100 nugget of gold in the year 2000, it would now be worth significantly more. The piece of gold hasn't actually changed in size. It's still the same piece of metal, but what has actually changed is the value of your dollar to how much gold you can buy with it. Gold was actually our original currency, used by our forefathers. I remember those days well. It's perfect, as it can't be manufactured, and it lasts for thousands and thousands of years. So, if you've ever watched Gold Rush on TV, you'll know how hard it is to actually mine this stuff out of the ground. Now, you may be wondering, if it's so safe, why is there any risk at all? It all comes down to opportunity cost. Opportunity cost. You have to ask yourself if you really want to just protect your $100 against inflation, or if you want to invest it in other opportunities, which could make it grow a lot quicker. If you invest in gold, then you will be missing out on these potential profits, making it a little bit risky. I would say that this is the perfect investment if you have a lot of money already, and all you want to do is just protect it. There are two different ways that you can invest in gold. The first way would be to actually buy physical gold, but if I bought jewelry, I don't know, gold bars, coins, and that sort of thing, I'd probably be paying too much, because the person selling it would want to make a profit, which means I would be paying more than the true value of the gold itself. The alternative is to invest in gold within a broker app, like Robinhood in the USA, or eToro in the UK. Then you're able to buy gold at its true value, and have the option to sell much quicker. In the USA, I would look for the GLD ETF on Robinhood, which is one of the largest gold ETFs in the world. They hold massive amounts of gold in vaults all around the world. As I'm currently in the UK, I'm gonna invest using eToro in a similar share, And with just a click of a button, there you go. I'm now Mr. Goldman. If that doesn't sound exciting enough for you, then why don't you try a simple low-cost index fund? Index funds. If you invested just $100 per month into an index fund with a solid annual return, then after 30 years, you'd have a substantial amount. That's the power of compound interest. You can do all of this without having any knowledge of the stock market. I remember when Warren Buffett, one of the richest men in the world, placed $1 million bet that a simple S&P 500 index fund would outperform a professionally picked portfolio of hedge funds over a 10-year period. Now, this contest wrapped up, and the results were made public. Warren Buffett had actually won $1 million bet, which really shows the power of index funds, and that the everyday person can take on the pros with little to no knowledge. Imagine an index fund as like a bag of mixed candies. The machine in the factory puts a range of the most popular candy into one bag, so you can enjoy the best of the best, without having to pick and buy each and every one individually. Now, just replace the candy with companies. That's what an index fund is. You can buy your own selection bag of the most popular companies in the world, such as Apple, Microsoft, Amazon, and Tesla, and your money is split between all of them. Now, let's go back to the candies. Imagine you left these on the side, and they're open for a few days or so. They'd go stale and they certainly wouldn't taste as good, would they? But by putting them in a container, you can stop that from happening. This is very much like index funds, as if you leave them unprotected, the government will start taxing you on the profits you make, but you can protect them with a sort of container like this, which is known as different things in different countries. In America, it's called a Roth IRA. In the USA, Roth IRA. And in the UK, it's an ISA. These containers allow you to protect your money after tax, and then any profits you make are yours to keep. But because they're so good and they're so powerful, there's a cap on how much you're allowed to invest each year. So, if I was you, I would take full advantage as soon as possible and max out your allowance. There are more in-depth strategies you can use, but for the purpose of this video, I'm gonna be investing $100 into an S&P 500 index fund, which, over the long term, has an average yearly return that's reliable. Drop a like if you'd like a full video covering this topic, 'cause there's so much on this we could talk about. But Alex, $100 isn't enough, as the S&P 500 is over a high price per share. Well, you don't actually have to buy a full share to invest. My favorite brokers are Fidelity, Charles Schwab, and Vanguard. So, if we head over to Vanguard's website now, and we find the S&P 500, here you can see what companies are in the index fund, so you can buy the right one. So, all you have to do is create an account. I already have one, and deposit some money, and then click, there you go. Job done. The fourth way to invest is in a real estate investment trust, otherwise known as a REIT. Now, imagine your friend collected $100 from many people. He will have a large sum. Then he takes this money and he buys a property. He rents it out and splits it with all the people that helped him buy the property, which helps them start generating some of that sweet passive income. That's the basic way of explaining a REIT. It lets everyone benefit from investing in income-producing properties without actually buying one. Think of it like buying a small share in a property. Let's say you own the front door, someone else owns the windows, and a few other people own all the bricks, but all together, you own the property. Equity REITs own things like offices, shopping centers, apartments, hotels, and much more, and they get their income through the rent. By law, they have to pass on most of all profits to the investor, like a dividend. However, they're taxed a little differently. The cool thing is that, in recent years, the average return for REIT ETFs has been competitive with the S&P 500. If you're in the USA, by investing in a Vanguard REIT, you can average a strong return, which beats the average real estate investor. How awesome is that? As I'm in the UK, I'm gonna use an app like eToro to put $100 into a similar REIT. It has high global diversification, meaning I can invest in all the up-and-coming property markets around the world. The next option is buying and selling items. Business buying, selling. The risk on this really depends on how good you are at finding great deals, but it's moderate overall. The good thing about doing this is that you can buy and sell something that you're interested in and have knowledge about, which can lead to bigger possible returns. Now, I'm going to invest my $100 in either pre-owned tech gadgets or sports equipment. Both of these I've got an interest in, so I should have a reasonable idea of what each item is worth. Trading cards would be a great area to have some expertise in, as their value at the moment is skyrocketing. Some celebrities just bought rare cards for huge sums. How mad is that? So, I've been on Facebook Marketplace, as most people have access to that platform, and I found myself a gadget that I'm gonna go and try and buy. It's up for around $100. We've sent a few messages back and forth, and I'm gonna go and have a look at the item now. Gentle music. Hello there, I've come about the gadget. Oh, yeah, here you go. Oh, in the box as well. Cool, that's good. Yeah, it's all boxed. Cool, that's right. So, Would you take a bit less for it? Nah, I've got the full price. In its box, in good condition. Can you do a bit better? I'll tell you what I can do. There you go, I'll throw that in. Really? That's what it came with. Full price. That's a deal. Okay, a deal then. Here you go. I'll give you the full amount. Lovely, thank you very much. We're videoing this for our YouTube channel. Do you mind? Oh, no, that's fine. Alright then, see you again. Thanks a lot, thanks for that. So, I've done a listing on eBay for the gadget. And the accessories, I'm gonna actually advertise. On a specialized website for enthusiasts. As I'm sure I'll be then selling to the right people. And hoping for big profits. Now we're starting to get serious. It's time for individual stocks. Individual stocks. There's a certain amount of risk. That comes with investing individual stocks. But if you pick your companies well, then it can be really exciting. As there's the potential to make a lot of money. During the tech boom in the past, I was really lucky to pick a few great stocks, which I cashed in and I made a lot of money. In a very short period of time. When the bubble burst, some of the companies I'd held on to, which had cost me very little, went completely out of business. Luck and timing can be a very crucial part of stock investing. I've picked these stocks using what's called fundamental analysis. Fundamental analysis, which means I looked at the business financial statements, their market, and also the leadership of their companies. Back then, this was a lot of work, but now it's easily found out on Yahoo Finance. A while ago, I read an article about an experiment where they simulated animals picking stocks randomly. At the financial page of a newspaper, the stocks picked on average outperformed the so-called smartest hedge fund managers on Wall Street. So, for this video, I thought it'd be fun to put this theory to the test. I don't have an animal, so I thought I have to do. So, I'm gonna throw a dart at the board, and as you can see, I randomly selected different stocks, and wherever the dart lands, that's what I'm going to invest in. Now, I've just got to put on a blindfold. Okay, here we go. Oh, you hit it. Right, let's see what we got. And we've gone into a tech company. Right, so I'm gonna jump straight onto my brokerage account and set an order for that. If you want to invest your $100 in individual stock, then some apps are currently giving away free stocks for a limited time when you deposit $100 into your account. I'll just leave the link in the description if you want to pick up those free stocks. So, now we're gonna be moving into the realm of gambling and speculation rather than investing. Number 7 is cryptocurrency. This is high on the risk scale. So, you've probably heard of Bitcoin. This is currently the most popular type of crypto. If you'd have bought $100 worth of Bitcoin years ago, today it would have been worth a lot more. That's a massive return on your investment, and that's pretty unheard of. Therefore, many people that invested in Bitcoin in the early days became millionaires overnight, but a lot of people also lost money. If you'd invested around $100 at a peak, by the next year, you'd have had much less left. So, really, no one really knows what it's gonna do next. It's extremely risky, but still very attractive, because it has the potential to make you millions. There are main types of cryptos. Types of crypto. 1. Ethereum. These are Ethereum, Ripple, and obviously, the big one, Bitcoin, but let's just focus on Bitcoin today. If you want to learn more about other types of coins, you can read something called a white paper, and it will give you all the details. The cool thing about Bitcoin is that it uses something called blockchain, and it isn't regulated by the government. You also can't create any more Bitcoins, which makes inflation absolutely impossible. In my opinion, this investment will probably only make sense if you're investing an extra $100 that you don't really need. So I'm gonna jump onto a popular Bitcoin app, which is called Coinbase, and invest my $100 in Bitcoin. And forget about it. By the way, if you wanted to give this a try, I'll put a link to Coinbase in the description down below, and you can pick up some free Bitcoin. At least that gives you a bit of a head start. The last is definitely a full-on gamble. You may have guessed it already, it's the lotto. The lotto. This is the highest on the risk scale, and isn't something I would recommend doing. However, I thought I'd include it in this investing video, as so many people choose to do it. In fact, a large percentage of people buy at least one lotto ticket per year. The chance of actually winning is extremely low, which might sound quite possible, but let me just try and put that into a bit of perspective. You're thousands of times more likely to win an award than win the lotto. Millions of people lose their money every year, but they keep playing, as the rewards are sky high if you win. I'm just about to invest in something I never thought I'd actually do. Here goes. Can I have a bunch of scratch cards, please? Lovely, thank you very much. Thank you, help. Cheers, now, thanks, bye. As you can see, this is gonna take me quite a while. I'm gonna leave a counter on the screen, so you can see how much I've spent, versus how much I've earned back from my investment. Let's do this. Playful music. I hope there's a bit more in this lot. There's gotta be, hasn't there? So, we're halfway through. The most we've earned so far is a small amount on one ticket. I'm gonna need some help. I've got more to go. Come on, friend. I know you've been itching to have a go at this. Have you got your coin ready? I do. Ready, let's race to see, wait for it, who can find the most money in the remaining cards. Ready, okay, on your marks, get set, go, upbeat music, you y'all ready to go you come on you let's do it you, some winnings, really, yeah, no, yeah, oh, wow, some winnings. He's only just started doing this. He's got more than me. I've beaten you already. Upbeat music, find a multiplier to win more. There must be some amount, we think. Is that? Yes, I think so. What have you got? You say you're smashing me. But I'll tell you what, how about this? How about this, another small win. Upbeat music, you y'all ready now, I'm making my move you. You better stand back, cause I'm coming though you. I'll tell you what, this has got to be an astonishing last few cards. If we're gonna get any money back from this. So, we just came back and we double checked it. We made back half from our $100 investment. Now, you may think that sounds pretty good, but that's actually a negative return. This was meant to be a little bit of fun, but it's pretty sad to think that people play this regularly, and on average are losing a lot of their money, when they could pick any one of the other investments in this video, and have a much better chance of being successful. I hope this has taken some of the mystery away from the other forms of investing and made them a little bit more understandable for beginners. If you'd like me to make a part 2 of this video, to see how these investments have done over a month, then make sure to smash that thumbs up button to let me know. I'm gonna leave the next video here, but don't click on it just yet. Remember to subscribe to the channel and ring that notification bell so you don't miss out on part 2. Okay, all, see you on the other side. English United States.